Greetings, everyone. Welcome to Liberty Call. Today is, what day is it? Wednesday, January 10th, 2024. Hope everyone's having a good day out there in the interwebs. It's a beautiful day here in Colorado. It's a bit chilly. What is the temperature outside right now? It is a balmy, come on, work with me here. It's 31 degrees. 31 degrees outside here in Larkspur, Colorado. Clear skies, but we've had a lot of wind, snow blowing everywhere, and we got some more snow coming this way. If you're heading to the mountains in Colorado, you probably don't want to go anywhere near them over the next week because they're going to just get hammered with some snow. We're talking in feet, not inches. Anyways, all right, if it is your first time watching Liberty Call, I'm glad you are here. Thank you very much, especially you in that brown shirt. I see you right there. If you could do me a favor, if you could give me some thumbs up, like, share, subscribe, follows, press that notification bell because you want to know when I go live. Because I might say something smart. Probably not today. That was yesterday. All right, let's get into today's numbers and see how they turned out. Looks like a pretty happy day in the markets. See a lot of green here. The Dow Jones finished the day up 0.45%, 170 points, closed at 37,695. S&P 500 up 0.56%, closed at 47,83. NASDAQ up 0.75%, closed at 14,969. The VIX fell 0.31 today. It's at 1272. Canada up 0.09. Brazil down 0.49, and Mexico up 0.3. In Europe, Germany was flat, up 0.01. The UK down 0.42%. France down 0.01. The Netherlands down a third. Spain up 0.07. Italy up 0.14. Switzerland up 0.06, and Portugal up 2.19% for the day. Russian exchanges both green. The MOEX up 0.29%. The RTSI up 0.85%. And the Asian markets, the Nikkei was up 2.08%. Australia down 0.69%. New Zealand down 0.5%. Let's see. In China, the Shanghai was down 0.54%. The Shenzhen Component down 0.55%. China 50 down 0.3%. DJ Shanghai down 0.46%. Hang Seng down 0.84%. And the Taiwan weighted down 0.21%. So, yeah, it looks like the Asian markets were mostly red. European markets were flat to green, and then real good here in the Americas. All right, let's jump over to our market recap for today. Stocks rise as megacaps lead. Inflation data and earnings are eyed. U.S. stocks experienced gains on Wednesday, driven by strength in megacap companies, although advances were tempered in anticipation of forthcoming inflation reports and major bank earnings later in the week. Microsoft, Meta Platforms, and NVIDIA played pivotal roles in boosting the S&P 500 index. The benchmark 10-year Treasury note yield holding steady near 4%, coupled with robust demand in a $37 billion auction of notes contributed to the positive sentiment. Among 11 major S&P sectors, communication services emerged as the top performer, propelled by a nearly 4% surge in Meta Platforms stock to its highest level since September of 21. Mizuho's upward revision of Meta Platforms price target to 470 from 400 fueled the momentum. NVIDIA reached a record high, gaining 2.1%, following strong fourth quarter revenue results from chipmaker TSMC. Despite concluding 2023 with a robust rally, stocks faced challenges in gaining upward momentum influenced by mixed economic data and cautious comments from Federal Reserve officials. Investors recalibrated their expectations for timing and magnitude of potential rate cuts in 2024. Market analysts observed this phase as a reassessment of 2024 expectations in terms of earnings and interest rates, emphasizing the need to justify the surge in prices witnessed in November and December of 23. The market's relatively stable performance early in the year suggested investors were cautiously evaluating opportunities. Attention shifted to the upcoming December consumer and producer inflation reports, scheduled for Thursday and Friday, respectively, as they could shape the trajectory of the central bank's monetary policy. Market participants closely monitored statements from New York Fed President John Williams and adjusted expectations to a 67.6% chance of at least a 0.25% rate cut in March, according to the CME's FedWatch tool. Crypto stocks, including Coinbase, Bitfarms, and Riot Platforms, experienced declines of over 2.1% as Bitcoin prices dipped following a U.S. Securities regulator statement on hacked social media message related to the approval of the exchange-traded funds. Boeing rebounded by 1.5% after a recent 9.3% decline as the CEO acknowledged errors amid ongoing grounding of more than 170 jets. Health services company DocGo plummeted nearly 40% after Fuzzy Panda Research disclosed a short position. Excuse me. The overall market sentiment saw more advancing issues on the NYSE than decliners, while the Nasdaq witnessed a slight edge over decliners over advancers. The S&P 500 index recorded new highs, and the Nasdaq marked numerous highs and lows. All right, so it's kind of a mixed bag right now. The market's still hanging in there. Again, that black swan has not ventured across our screens, so I imagine it'll happen sometime later this year. But again, could be wrong. I just watch the charts. They kind of tell me what to do based on how to base my trades. All right, next up, an article here about Bitcoin, why one bank sees Bitcoin hitting $200,000 after ETF approval. That's a pretty big number. After the SEC's initial announcement, followed by a retraction citing a hacked account, the approval of several spot Bitcoin ETFs is anticipated to be confirmed, marking a significant development for Bitcoin's institutional acceptance. And if I could stop here, I've seen several articles and heard a lot of scuttlebutt over the last week that it's going to be within the next couple of weeks. So could be this week, could be next week, could be the week after. But it looks like there is going to be some Bitcoin ETFs out there that based upon that information, it could drive up the price to 200,000. I don't think so. But, certainly, if there's more buyers in the market that are, wanting to add that to their portfolio, and up to this point, you haven't had a mutual fund or an ETF option out there that you could just plug and play and, like gold and silver and all the rest. So we'll see. I think it will add to some upward momentum in the price. But again, I don't know if it's going to jump that much. All right, let's get back to it. Where were we? All right. Standard Charter's Jeff Kendrick suggested that ETF approval has been a crucial driver of Bitcoin's price upside, drawing parallels to the introduction of the first U.S.-based gold ETP in 2004. Back then, gold prices surged 4.3 times over 7 to 8 years, coinciding with the gold ETP holdings maturing. Well, also, there were some financial issues that happened in 2008 and 9. So, that probably affected the price of gold also. Kendrick anticipates a similar magnitude of price gains for Bitcoin over a shorter 1 or 2 year period, with BlackRock sponsorship expediting the BTC ETF market's development. Comparing potential inflows to historic examples, Kendrick estimates between $19 billion to $58 billion flowing into Bitcoin ETFs. He notes that these figures might be conservatives, assuming no price impact from ETF approval or resulting inflows. Kendrick envisions BTC or Bitcoin reaching 100,000 by the end of 2024 at a constant monthly increase of 7%, with potential for an even higher end 2025 level of 200,000. These projections are based on the assumption of 437,000 to 1.32 million new Bitcoins held in spot US ETFs by the end of this year, 2024. Assessing immediate supply elasticity, Kendrick notes a record low at 24% compared to 34% at the last halving. This could make Bitcoin supply more price inelastic, amplifying the impact of new demand. Standard Charter's BTC ETF inflows estimate for 2024 range from 50 billion to 100 billion. Bloomberg's ETF specialist Eric Boloshness finds the estimate high, suggesting the over-under of 15 billion in inflows and a ballpark of 50 billion for assets under management by year end. While debates continue about the accuracy of these estimates, the potential impact on Bitcoin's price trajectory is significant, especially as money market funds could divert substantial capital into crypto ETFs, further propelling Bitcoin's value. Yeah, and whereas right now, typically in a brokerage account, where you have your stocks, your bonds, your mutual funds, ETFs, and then whatever's not invested sits in a money market or cash account that's usually tied to something where you get some interest on it. So as of right now, you don't really get a whole lot on your interest. Yeah, it's better today than it was 2 years ago, but if Bitcoin is an option that people could park their cash in their brokerage accounts, it just opens it up to a lot more people, as opposed to having to go onto Coinbase or one of the other places where you can buy and sell crypto online. It allows you to have it all in one place, and you're able to see it. So I think this is actually going to be a pretty good thing as far as increasing the acceptance of Bitcoin as money. All right, let's go on and get to our last article here. This is They Took Our Jobs. This comes from Zero Hedge also. It's titled, What is Going to Happen to Our Society as AI and Robots Take Most of Our Jobs? This was authored by Michael Snyder via the Economic Collapse blog. Well, that sounds positive. All right, let's see what he had to say. The increasing prevalence of artificial intelligence and robots in the workforce is poised to reshape employment dynamics, raising concerns about job losses and societal implications. Amazon, for instance, is testing humanoid robots like Digit, developed by Agility Robotics, alongside human workers in its warehouses. At an operating cost of $10 to $12 per hour, predicted to drop to $2 or $3 as production scales up, Digit poses a formidable challenge to human workers, offering efficiency and cost effectiveness, and they don't get sick or complain. White-collar jobs are not immune either, with projections from Goldman Sachs indicating that AI could automate up to 300 million full-time jobs globally, particularly impacting administrative workers and lawyers. This widespread integration of AI and robots threatens various professions, leading to potential unemployment for millions. Yeah, I actually like the idea using AI for contract law, because all it would have to do is just read through all the contract verbiage and say, is this yes or no, or is this legal or not legal? And really wouldn't need judges or anything else. You might need someone to observe and make sure there wasn't an error, but that's the way things should work. Not this, you're on this side of the aisle, so you're going to get this sentence, or you're on this side of the aisle, or you're going to get this sentence. So, we're seeing that right now with things going on in Washington. So keep my politics out of the way right now. All right, let's jump back in. The recent U.S. economic data raises concerns about job losses, with the household survey indicating a loss of 683,000 jobs, contrasting the positive figures from the establishment survey. The number of full-time jobs dropped by 1.531 million in December, signaling a significant downturn. Even BlackRock, a major financial player, plans to lay off approximately 3% of its global workforce, reflecting broader economic challenges. And I think I saw where they laid off a bunch of people here just in the last week. Most of them were like their DEI and ESG type people. So it's not really, you're not losing out on like your analysts or anything who are, picking investments. Jumping back in, bankruptcies in the United States surged by 18% in 23 compared to the previous year, driven by factors such as higher interest rates and a more stringent lending standards. The economic crisis is gaining momentum, potentially exacerbating unemployment and financial instability. As AI and robotics continue to reshape the job landscape, concerns about the future of work and the broader economy intensify, prompting individuals to brace for the uncertain future marked by significant challenges and transformations. So here's my advice to folks, and this has nothing to do with finances, but continue to learn. I'm going to be 50 next month, and I'm always trying to learn something new, whether or not it's coding or research or reading or, about politics or about the government, the Constitution. These are things that I've never stopped learning. I probably learned more in the last 10 to 15 years with the advent of podcasts and things like that, where I can really just cram a ton of information into my ears. And, I listen to my podcast at like 1.5 speed. Don't recommend doing that. But, so anyways, being able to be nimble in whatever job market presents to you is probably my best advice to folks. Whether or not, you're starting out in life, with your first job, or you're someone my age who, you still got 20 or 30 good years probably. And, might change professional roles, once more between now and then. So, I've done a lot of things since 1992 when I graduated high school. I was a waiter, and then I was in the military and fixed airplanes for 4 years. Then I went into customer service for a year for AT&T Wireless. Then I was in the collections and recovery industry for a better part of a decade before I started doing this back in the mid-aughts. So, I've done a lot of things and, learned a lot of stuff along the way. So that's my advice to folks. Don't worry about, AI taking your job, because there's always going to be a new job that opens up. There's going to be new paths that we never even thought of. If you told me in 1992 that I'd be a financial advisor, I'd be like, what? I'm going to be an architect. Well, that didn't work out. So anyways, all right. Well, I hope everyone, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope you have a wonderful evening, and I shall talk to you again next time. Adios.